Hello and good evening, everybody, and welcome to Contenders livestream number 128. It's a real pleasure to present you today's stream, as over time I've had a lot of requests to do another stream similar to this one. So what I will start off with saying is that this stream is a direct sequel on the initial market structure video. To be more precise, I'm actually referring to Contender Stream number 80. So it's a direct sequel to this one. And today, in this stream, I'm going to expand on the concept in the next few streams and talk you through a few strategies that you can actually use to generate trading awareness, trading ideas, and also even how to execute them. In this streams and also the one thereafter, so the one from next week, I do strongly believe that there is going to be something in it for every level of trader. So if you're a beginner, if you've just joined, very much welcome. If you're more intermediate or even on an advanced level of trading, then I'm pretty sure that over the course of this week and the next week, you will find something that is going to be useful to you. So all that's left to say, get ready, sit back, relax, take your notebook out, and simply just enjoy the stream. Before we fully begin, please pause the screen, read the trade disclaimer, or pause it afterwards and then read it, because the information given in this stream are for educational purposes only and by no means are meant to generate any kind of trading signal or financial advice whatsoever. Now, without further ado, let me really quickly check if actually everything is going according to plan and my sound is working. Double check, double check. Yes, should be fine. All right, let's get back to the PowerPoint presentation. Let's begin. So let's recap really quickly what we've talked about in that first market structure stream. So because it has been a while ago, if you haven't been able to catch up to the stream, let me just quickly reintroduce you to some of the concepts that we've been talking about in that particular stream. Because from there on out, we're gonna directly link into those key concepts covered in that stream and expand on it. The key points that we've talked about in the previous stream revolved around the different market conditions. We've discussed upward direction. We've also discussed downward direction and sideways price action. The market can move up by making higher highs and higher lows in structure, which is something that we call an uptrend. The market can also move down, making lower highs and lower lows. When a market simply goes up or down, we call this a trend. Or, in other words, I would call that stage one. Now, what I want to ask you all, in order to follow along in this stream, is to remember this number, right? So when the market is trending, I'm going to refer to this as stage one. This is key to understand the rest of what I'm going to cover in this stream. Moving on, when the market fails to make new highs in an uptrend or new lows in a downtrend, we can say that the market is in a stage of consolidation. This is something that from now on I will refer to as stage two. So just to summarize that, stage number one is when I refer to either an uptrend or a downtrend, in other words, a trending market, and stage two is what I'm going to refer to as consolidation. The thing is that almost at all times, the market switches from stage one to stage two, and then usually it changes back to 1, 2, 1, 2, and so forth, and so forth, and so forth. In rare occasions, we do see a change from, let's say, an uptrend straight into a downtrend. So stage one to stage one. That is something that we can, that generally is being classed as something like a V-shaped recovery. This is something we will look a little bit further ahead in the stream. However, it is very rare, doesn't happen a lot, as usually the market shifts from stage one to stage two. So that's already a very important thing to realize. What I want to do in this stream is I want to build on these basic concepts and now actually steer the focus into how being aware of what stage you're in can actually help you define your trading context or your trading idea more specifically what trade type you might want to sketch out for yourself, and how you can move from your analysis to actual trade execution. So having that said, that was the refresher. About 3 minutes into the stream now, and I kind of want to get practical right away. So let's get straight into the practical side of things and actually move on to drawing some things out on the actual chart. So what I'm gonna do quickly now is switch on my my screen to trading view, which I've already prepared, and let's continue on from here. So let's talk about trend trading first. Let's talk about trading a trend first. So typically, let's say when an asset just begins to trade, when there's no data available at all, let's assume that is the situation. The first thing that's gonna happen, what price is gonna do is either it's gonna go up or literally it's gonna go down. It's gonna look something along the lines of this. I'm gonna pretend that we're moving up in price. The thing is that this is a stage of the market where initial structure is yet to form, right? So price is just rising as people, as the market basically generally agrees that price is gonna search for higher levels. It's basically a discovery situation where people are going to continuously be in conversation with each other, or traders, or the market, underlying market sentiment is going to be in a conversation with each other. Is this too cheap? Is this too expensive? At this point in time, nobody really knows, until at some point when there's a consensus has been reached that price is going to be considered too expensive. That is the moment when people who are in long positions for the first time are going to take profits. This is also when that happens, closing out of a long means selling your position. So that translates into selling. Other traders react onto that by opening up shorts. So now, suddenly out of nowhere, essentially, price is now being classed as too expensive. And that is usually where first retracement is starting to kick in, right? So price is going to retrace. We have now the first piece of information and the first part of market structure potentially forming. What we do know now is that this has been a point where people find price too expensive. You can class that as the first freshly created resistance based off of what happened before, right? The problem with this is price structure is still incomplete. So even though price is going to search for value lower, where, hopefully, or with the intent of finding out where price is then in turn considered to be too cheap. This can be a retracement of the move prior to that, but price can also very much easily travel far below where the price initially started. So you can already imagine that it is not really clear what is effectively going to be the bottom of this thing. Now, if you're a little bit experienced and you know a thing or two about using technical tools already, you can make a somewhat educated guess as to where price might retrace to. However, this is not really a confirmed market structure yet, right? So hold that thought. I'm going to return to this in a second. Then, let's just assume that price retraces halfway through the previous move. Then price is now considered too cheap, and that is where people in shorts are going to get out of their position again. So they need to buy back their position, which equally translates into buys. So that shows the first form of demand, so to speak. When other people pick that up, or other traders, they're going to switch back into longs, and that is when you generate more buy, and as a result, price is going to make another rise at some point. So now we have our second data point, because now the opposite has happened as what has happened before here, where price was classed as too expensive, and thus creating a resistance point, or I would say a sentiment checkpoint, maybe a more simplistic way of viewing it. The same thing is now happened to the downside of price, where now people class this level as too cheap. And therefore, the market rotation essentially takes over and buys take its place, causing price to rise again. Now you basically have your second level, which you can class as support. Now, let's assume that price is going to continue traveling upwards and retesting this high. And this time, actually, instead of where people previously agreed that price was too expensive, now it actually passes through. Right? So now the context of the market situation has totally changed, because what was before classed as too expensive now suddenly has little meaning anymore in terms of resistance, because now people do not think anymore that this level is too expensive, because it's now much higher. At some point in time there will be another checkpoint building as that, where people do think it's expensive again. That is when you typically would get another retracement and then backtest that previous level, double checking like, hey guys, is this level now still too expensive, or do we all agree that price is now classed as too cheap at this level? This is what you can class as a support and resistance flip, essentially. And this is when you already have a bullish market structure with confirmation, essentially. So to make it a little bit more simple, when this actually already happens,